We're gonna get started at 7. We open the room a little early just to make sure I got everything set up. But y'all come on in, come on in. We'll get started at 7. Come on in. What's up? What's up? Welcome to the Trade War Chest Weekly Analysis and Gold Market Forecast. We're gonna be getting started in a few minutes. I'm gonna minimize myself, so I might be out of the screen, but I'm actually here. Let me switch over so I can get into controlling this screen. All right. Generally, when I come in the market on Sundays, this is where I like to start out with my charts. I want to start out by basically erasing everything that I had previously on the charts because the market is always changing, the sentiment is always changing. You always want to be as up to date as possible as far as your charting and stuff go, and you kind of don't want to be clogged up and get messed up by seeing old data that you saved in your chart. So generally what I want to do is, as y'all can see, I'm starting off on a weekly candle chart. So basically what that means is each one of these candles represent 1 week or 7 days, right? In the price of gold. And as we can see, for the past year, gold been straight going up, right? On a bull run, right? So first thing I would do with my chart is I would want to mark this trend, right? Because this is the direction of the market. And it's just let me know that, okay, generally the market for the last year has been boosting the price of gold up. So I start off by taking a simple tool, one of these lines, and I like to use green if it's a bullish or upward trend, and red if it was going down. But generally I'm going to start off just like this, right? And what that tells me is that the market has continued to go in the upward direction, right? And each one of these points where we see the candles touch the line or this trend that I marked is going to be where the market found support, or saying that, excuse me, the market pushed up, it found what we call resistance, right? And the resistance was able to push the price back down to a point where the market found the support where the buyers were sitting waiting to push price up to the next level. Same thing repeated where it met a little bit of resistance, so it just slowed down that bullish momentum, slowed down a little bit. Market came down, found support, and used that support to move its way up. It found more resistance, came down, found support, continued its way up. So generally, this line lets me know that as long as these candles, right, stay on the top side of this line, then the market is going to continue going up. If the market crosses this line, then it's going to break this, what we call a trend, right? And this is a trend, meaning that the trend of the market is for people to be buying gold right now, and people buying gold right now. Oh man, these ads and all this stupid stuff, but yeah, the trend. So now that I've got that mark, that's generally all the information I'm gonna need about which way that the market is going. Now, the next thing I want to do is I want to mark out these places where the market found support, right? So I'm gonna take horizontal ray, and I'm just gonna mark these. All right, and I'm gonna mark them. I get a little bit more into why I'm choosing these particular points to market, but it's generally how I start out the week. I'll come in and I find these points and different ways to save information so that I can use it to understand where the market is, how it's moving, and why it's moving that way. When I can understand this, or have some kind of understanding of what direction the market is going in. You know, if it turns around and starts to go that direction, where do I look for the market to find its support, right? And all of this is going to help me in finding entry and exit positions as I move down in the time interval on my chart, because this is a weekly chart and I'm not doing like swing trades where I'm getting in a trade and holding it for 6 months. I'm generally getting in a trade looking to hold it for 2 minutes, in and out, in and out, in and out. It's called scalping, the method that I use, right? Well, and I think I got one more right there. All right, so that's all the information that I'm gonna see, and what I tend to like to call this is my trend, right? And I'm not the same as most other traders that you're gonna hear are gonna refer to these horizontal lines as support and resistance. I refer to them as a place of equilibrium. When I say equilibrium, I mean it's a place where the market is at an equal position as far as buyers in the market and sellers in the market. And then these things like trends, right, come into effect, because I know that this is the equilibrium spot, right, where the buyers and the sellers, are kind of fighting over control of the market. If the market continues up, the buyers win. If the market would break that trend, then the sellers would win, and we would have what's called a reversal in the market. So that's pretty much, from what I can see, how I would mark out my chart for the weekly, right? So we see that for the past year, the market's been going up. We're starting to see one of these sections right here where it's doing this. So what we start to look for when we see this is possible reversals, right? Or continuouses in the market. Now, one thing I'm going to do before I leave the screen is I'm going to turn on these two indicators that I use so that I can, get a little bit more understanding of what's going on. And I'll do them one by one so I can explain them. This is the Ichimoku cloud. It's an indicator that was created by Asian, way back when it comes down to trading. They was trading commodities and goods, right? And we basically created this indicator that has a lot of different averages. My bad. My bad. These knuckleheads in here with me. But it's basically a bunch of moving averages, right? And every indicator that you're going to see or tool that you can add to your chart is going to be a moving average. I generally use this for positioning of the market. I'm generally of the understanding that if the cloud indicator is green, then we know that that represents bullish momentum, right? But there's certain actions and certain ways that this cloud can start to look that will indicate a reversal in the market, right? And generally the candles will fall down through a green candle and go up through a red candle. Y'all gonna continue to hear me say that. It's the lagging line, right? And this is just like a lagging indicator, kind of generally giving us this same candle chart in a bar or in a line chart form. My opinion, that's what that is. But I use it basically, like I said, with the other one was for positioning. When it's up and on this side of the candles, I generally look for the market to continue up. When this indicator starts to move in closer to these candles or actually breaks through these candles, then that's when we're going to start looking for price to go down and go through this illustration, which is also only an illustration of the pattern of these candles. If you look at this bottom line on it, you can kind of take that blue line and just draw it, around this. Take that top green line and draw it around this. So it's just basically an illustration of this candle pattern. Same thing, but it's based on moving averages of these prices, or basically saying averages in between price on each of these candles as it's moving. It puts it into illustration. The Bollinger Band is probably my favorite indicator, and it represents these three lines. There's a green line you see here, a yellow line you see here, and a red line that you see here. Generally, if the candle pattern is on the top half of this indicator, meaning above this yellow line but below this green line, then the market is going to continue upward, as we've seen. If the candle pattern crosses this yellow line, right, and goes below it, then we're looking for that reversal, right? This top line pointing upward, this bottom line pointing upward, this line pointing upward kind of just tells us that the market is going to continue upward. Although we have it's very slight, but you do see a bit of curvature right there in that green line, which does indicate a little loss of momentum in the bullish market. So we could possibly be looking for a reversal, a retest for support somewhere down in this area right here. All right, I'm going to all right. I'm gonna go down and I'm gonna go down in time to 1 day chart next. I'm not wanting to get a lot of lines and just mark up my chart and have a bunch of junk. But if I see anything during this, I'm gonna hit down. That 4 hour chart should, do it, but as I go down in the time frames, I kind of look. But what I would do want to do is keep these indicators here so that I can understand what's going on with the market, right? And we see when we go down to the daily that we got it's ugly, but we got what's called a head and shoulders pattern. It ain't perfect, but it's there. Right, and the head and shoulders is gonna be you got a shoulder here, head, shoulder. So I'm looking for price to do this. And that's from this daily chart. So this could happen, over the next week or 2 weeks, but generally this is what it's looking like dealing with that 1 hour chart. Now I'm gonna go down, and if that changes, then I can just take that off. What I'm gonna do is turn these indicators off too, so we can see stuff better. It don't have to be perfect, but what we want to look for with this pattern right here, right? This is where we get into some real technical part of it. You get what's called the neckline, and we already got it. So I'm gonna just delete that. We already got a neckline right there, like green. So basically, what we're looking for is for price to come down across this, and then we're gonna get a real drop down to this next price level. All right, so we had 33.20, 33.16. Looking for price to go down to 32.47 if it continues. Let's turn on the cloud and check it out. And you see we're starting to go through that green cloud. Let me make this a little bigger. We're starting to go through that green cloud right there. So I'm going to get rid of this blue line, marking the head and shoulders. And now that I'm on the 4 hour, I'm going to mark my short-term trend, right? And I got a trend right here, but I can connect this. All right. And then what I'm going to do to remind myself that I'm on a bearish trend is I'm going to make that red, right? So now my 4 hour chart looks like that. Very simple, right? I got my lagging line that's crossed through the candles, right? As we said earlier, when we see this lagging line cross through the candles, generally that signifies downward momentum. When we see the candles hovering over a green cloud, generally those candles are going to fall through that cloud. So I'm of the opinion, so far from what we're looking at, that we're definitely in short-term correction in the market. As we can see, it's been all over the place, setting new highs. I do believe that it's going to be a short-term correction, and the market will continue on its upward trend because I'm skeptical of gold ever going back to the prices that we used to it being. So from here, I moved down to a 1 minute chart. I mean, a 1 hour chart. From that 1 hour chart, generally we start to see that, okay, we might get that motion, but it could be a pump fake, right? We got our downtrend, but we got this red cloud. But now we are real technical, and I'm going to go into the momentum of this blue line or indicator, whatever you want to refer to it, is pointing straight down. We're going to turn on this Bollinger Band now, right? See how everything's pointing down? So what we're going to look for is generally being that we're in the Sydney market, and then we're going to go into a crossover market where we're trading with Sydney and Tokyo together. This market generally is a bullish market right now, and they generally will set the zone for the market, meaning that they're going to set the low for the market for each trading day, and they're going to set the high price for the market each day, and that's up until about 9 o'clock. I'm gonna say with the New York market. When New York comes into the market, anything can happen. So generally, for speaking right now, where we at in the market, this generally tends to push price back up. We see that we got some green candles, so it's showing bullish activity or momentum. We got a red cloud that the candles, like to go up. But I'm of the opinion that price is going to go up to somewhere around 33, 35, somewhere, meet that resistance, and then, oh man, let me go back, put my line back, meet that resistance, and then continue on this downward pattern. This lag line is, it's kind of got some distance away from these candles. So I don't see it breaking back out up this way. I believe it'll come back up until this lag line either meets resistance on this indicator or meets resistance on the candle. Everything that you see, right, represents some form of support or resistance, right? This cloud, if price were to come up to it, it would see resistance, right? Because this is bearish momentum. If it were to come up to this yellow line, it would see resistance, right? We see that the red line acts as support. If it goes up and crosses over this red trend line, the only thing I'm going to be looking for it to do after that is to go up, meet this resistance here, and then use this trend line as support. Meaning, if it does break through this, it's going to come up, meet this resistance at this cloud somewhere around, 33.50, and then it's going to start moving back down, finding support on this downward trend. So we'll see something kind of like this. And it's just quick drawing, but just saying that it crosses that. Let's say it breaks the support. I'm looking for it to meet resistance there, come back, find support, resistance, support, resistance, support, and so forth, so on, depending on how this cloud plays out or how the momentum of the market moves. News and all kind of other things can affect that, but generally, I try to keep the news out of my mental. I don't let it affect me because you can try to predict the market based on the news, but the market will do what it wants to do, irregardless of what's going on in the news. Sometimes war or attacks or major geopolitical news will affect the market, but generally, that's when me personally, I get out of the market when it's craziness going on, and I like to trade when it's a normal market, when it's just a normal atmosphere, based on the economy. When the news and all of these sudden things happen, that's when most the losses come into the market. So you generally want to have a time that you get into the market and you get what you're going to get out of the market and you go. I also am of the opinion, all right, I just was making sure I'm still on the screen, that beginners, this market is a better market to try to learn to trade in because it moves a little bit slower and you can kind of keep up with it, and it's just easier to learn to trade and build your strategy in a market that has a little less volatility. Now we're going to go down into the area where we really get the money. We're going to see how this chart has been playing out. And we can see that it's a real short trend line. We're just dealing with basically what's happened over the past couple of days. But we can see, like I said, this market is going to generally probably push price up. We may see another little small dip, but this market generally will push price up. We see the lagging line coming up about to break the resistance of this bottom line on the Bollinger Band, and then the next resistance will be the candle pattern itself, followed by the middle indicator on the Bollinger Band. And then if this lag line gets up on top of the Bollinger Band and the cloud, then we got a reversal in the market and price is going to continue up. If price comes up and it meets resistance at any one of these markings or indicators on the chart, then we can be looking for our continuation down. Me generally, like I said, I'm looking for this market, particularly while it's early, to kind of, go sideways a little bit. Let's go down to a 1 minute chart so we can kind of see some live movement in this thing. We ain't gonna be spending a lot of time here on these Sundays. We're just gonna be coming in and getting a quick overlook over the market and give a little bit of understanding how I do use these indicators and drawings and all of that on the chart. As you can see, when I come down to a 1 minute, we don't see any of my markings on the chart. So it kind of lets you know that, in my opinion, we're in a no holds barred chart of area of the market. So what I would do is I would stick around probably this 5 minute chart and just trade this. And right now it's looking bullish. Like I said, I think that we could look for something sort of like this out of the market, and then probably later this evening, when the Sydney market closes, China generally they dump gold and get out of the way for London and New York because they don't know what's going on. Another thing we can use, as you can see over here, I got some of these on my watch list. And I just watch because I trade gold. I watch how Asia is treating gold. I watch how the U.S. is treating gold, how Australia's Sydney market is treating gold, and how Europe is treating gold. And we see they're all green, showing a little bit of bullish activity. The dollar is, the dollar is doing bad. It's struggling for its supremacy, but it's still got its head barely above the water. Bitcoin, is doing this thing. And these are two fiats that I watch, the U.S. dollar versus the Japanese yen, and the euro versus the dollar. These kind of give you a little bit of indicator, of what's going on in the market. And I'll be getting into some advanced stuff, but generally we just want to come and spend some time on here every Sunday, and we map this thing out to try to figure out what we think is going to go on for the week. And we pretty much accomplished that with this 4 hour chart way back in the beginning. I'm going to make it a little bit bigger. What we got to understand is each one of these candles represents 4 hours. So I'm generally thinking like price is going to possibly come back up, like I said, push back up to here, but it's going to fall through this cloud. And I do believe it's going to fall to find support. And in my opinion, the support is, about 500 to 800 pips away, which means about $80, $60 way in gold price. So I do believe gold will be falling under 3,300 to about 3,250 this week. And of course, it ain't gonna go straight down, so we're gonna see all kind of madness. We might see a little false breakout, fake run. It might even come back up to test support here, but price is gonna come down on this because all of these countries are, in the works right now, working out deals and all of this because everybody's suffering the same thing. They got bad economies and their fiat currencies are doing bad. That's generally what I want to share with you guys today. I'm gonna get this off the screen and bring the big dog back up. This the big dog back up. Yeah. Generally, that's what I do, man. As y'all can see, man, I'm at the crib. You don't need no bunch of fancy equipment. I got my laptop. I got my phone. I do a lot better trading when I do have my multiple screens set up at my office. But generally, if you got a computer that you can, or a tablet that you can look at your charts and analyze on, and then trade on your phone, that's plenty. What you want to do is you want to create an environment where you can focus. You don't want a lot of noise. You don't want to be trying to watch TV and trade or listen to music and trade. You want to be focused on what you are doing, the task at hand, which is studying this chart, analyzing it, and understanding the info that it gives you. Some people deal with anxiety because you're gonna get a lot of anxiety when you're in these positions and you looking, waiting, you know what I'm saying, in suspense, trying to see which way the market is gonna go, and if you in the market the right direction. And everybody has a way to deal with calming themselves down or dealing with anxiety. Mine is right? I got PSTD, a prescription, to legally smoke. So that's what I do. I smoke. I get myself relaxed. I get it quiet around me. I turn the TVs off, silent my phones, and I stay focused on what I'm doing. Generally, I get in the market, and if I'm locked in and I'm really, really, really focused, you can get in the market and get your daily gains and up maybe an hour max, but you don't want to be spending a lot of time in the market. I used to trade almost 24/7, man, and I was driving myself crazy, and you actually wind up losing a lot more than you wind up winning. So I would advise somebody
First, unlock your phone. If you
trying
update
to
your lock screen settings, next time I can help.
my phone talking. My phone just started talking to me. But Gemini, whatever it is. But yeah, you want to be somewhere where you relax, somewhere where you just can focus and dig in. That's gonna be it. I just want to share a little bit. I'm gonna come on every Sunday and give a few tips. See a couple people popping up. I'm gonna save it on the channel, and y'all can go back and look at some of the stuff that I shared and analyzing the market for this week. I generally got the market moving between the position where it is now, but around 33. Let me check this out again. 33.16 to 32.49. I definitely believe that there's going to be a slight little correction in gold. So if you're already a trader and you're just looking for a little insight, there it is. You got that. If you aren't already a trader and you're interested in it, look down in the little banner scrolling across the bottom. Uh, 30 days to profitable trading is a program that I offer that's going to be cranking up soon. Where I'm challenging you to take my program, and in 30 days, I'm going to take you from being either a beginner in trading that don't know nothing about it, or somebody that's been trading and just can't find the stride to be profitable. I'm gonna make you a profitable trader in 30 days by teaching you my strategy, giving you some risk management strategies, and just helping you get locked into having a trader's ice cold veins. You know what I'm saying? Mentality, because you got to be stone cold to be a trader. Um, if you're interested, check it out. Go check out the site, man. There's information. There's some ebooks. Um, or just reach out to me if you got any questions. I'm available, by email. I believe my email is on the site, or you can just shoot a message in one of the things and I can get back with you. That's it. We about did our little 30 minutes DP. Trade war chest, 30 days to profitable trading. This is my weekly analysis that I'm just giving the community for free. Anybody that's in the market and trades gold, man, check it out every Sunday. I'm gonna be lining it up and giving you pretty much the area where I'm looking for the market to make all of its movements. And then I might throughout the week start doing something in the evenings from maybe 6 to 7 or 7 to 8 in the Sydney market when it's real low volatility and volume, and I can actually explain and give examples of how these indicators and everything reacts to each other in the markets. Thank y'all for checking the video out. On DP's Trade War Chest in 30 days to profitable trading challenge. Like the video, subscribe to the channel, share the video, share this with people. If you know somebody that's a trader, man, and they're interested in trading, send them this way, man. I got them. This is my way of giving something back to people, especially a way to be able to, finance your family, man, and your lifestyle. I can't be on any of my platforms telling people to, walk away from the way, we lived and stop all of the chasing the materialistic stuff without offering a way for them to provide and produce for their families. And this is one of the ways that I'm giving. So every Sunday, if you're interested, log in, check us out. If not, Ain't no hard feelings. Keep it moving. I'm gone. This DP trade war chest. 30 days to profitable trading analysis and weekly forecast. I'm gone. Thank y'all for showing up.